Hey guys, want to take a look at a back test for ES on a 15-minute bar, and this little algo is running in the RTH session. And what I'm doing is just if the price closes outside the ones, so do you see the ones? I've got the ones, the first standard deviation on multiple time frames, so 1 hour initial balance, the Globex, and the daily. And so when it crosses these ones going out, that's when the algo executes and using the PT2 indicator like an ATR. And I'm going to show you that I'm running the identical strategy using Jats PT versus the standard ATR that everyone uses for a volatility indicator. And JATS is a volatility indicator and it dynamically adjusts to volatility as price, develops, ranges develop. It goes up and down. And so these strategies, are traded the profit target and stop loss like you would with an ATR, but using the threshold values of the current volatility in the market to reach that target dynamically. Volatility adjusts just like it would with the ATR. So here's the strategy using ATR. And I'll show you the Blackbird and the Bloodhound, and then we can talk about this in the trade room, um, training room, not trade room, training room. Um, so here's a 14 ATR. Let me go ahead. I think I'm using a 20 period, so let me make that change adjustment. Use a bit wider period during the daytime. And this is set to run during the RTH session. And I'm using 15-minute bars, just FYI. So let me move this up. Here we go. So it didn't change between the 14 and the 20. Interesting. Um, so the threshold automatically calculates on ATR, and that is commonly used in the industry to dynamically set volatility stops and targets. In fact, it is set as a preset in Shark Indicator's Blackbird tool. You can get a stop loss automatic. Let's see. You put a market entry order in and then just show you this stop loss. They've already got an ATR setting in here, and that's their default settings for the indicator. It's a 20 period 1.5, pretty standard. You can use a 20 or a 14. They use 20 generally for intraday trading, and this again, like I said, is for RTH session 30 15-minute bars or 30-minute bars. It works well on both. But the strategy performance for the 15-minute ATR bar is pretty good using my strategy, which is waiting for price to break above or below. Um, it's using momentum VWAP, but in your requirements before the trade executes, I have a second signal requirement that it be above the Globex or above the daily one or above the 1 hour IB. And so when it's outside that range, the first standard deviation of the Globex, the daily, or the 1 hour IB can be either of them, and they can you can allow reentry on same bar. Um, but I'm running this without allow reentry. I'm just doing it one signal per bar. Um, but so it's pretty good overall performance. 139 profit factor and a 55.97 percent profitability overall. And the analysis looks pretty good. A pretty nice upslope. This September 1st drawdown, I went back and looked at it, and it was going right into a higher time frame second standard deviation. So that was pinned. So these drawdowns are pins that it can't get through. They just get to the end of the range. And so it's easy to see those higher time frames when you have the indicator in front of you. In fact, we'll go back and take a look at that in just a second. But I ran the same strategy except for using the Jats PT indicator. Same exact strategy, same exact conditions, but flipped out the ATR for the Jats PT2 and just leave it with the standard default settings. You don't have to make any changes. And I'm just using a 1.5 also like you would the ATR, except for on the daily, I did this on both. I gave it a little bit more room because you're going outside of a higher time frame range. And so the results are better on the Jats PT. Pretty much, um, let's see, sorry. I guess I closed it. Here we go. Sorry. 85 5 versus 77.5. So a pretty good increase in profitability using the Jats PT volatility indicator to set that, volatility measurement. Um, and it dynamically shifts like the ATR does, but get a better performance with the Jats PT. 56%, almost 57%, 56.92 overall. So it even got a better percent profitability and a better profit factor. So I'm very happy about the Jats PT performance and wanted to show you that outperforming the ATR. So one thing to do when you're doing your back testing, make sure that you take and consider your bar size. So I'm using a 15-minute bar in a RTH session. So you want to set your bar size to 405 minutes. How many 15-minute bars are in 405 minutes? And there are 27. So you can multiply 27 times 15 and get 405. So make sure you put 405 bars required to trade if you're going to be trading a 15-minute bar. Recalculate for a 30-minute bar or a 5-minute bar. You have to have 15 days worth of data, 15 sessions rather, um, to get this calculations to work correctly because we're calculating these range breaks from these higher time frames. I've got daily Globex and the 1 hour IB. And so make sure you are aware of that. And this is rearming. Hang on one second. Okay, yes, here it is. Um, we'll take a look at it. So I'm just using a mom and a VWAP, so it's my momentum and VWAP to give the trend signal, and using the Jats PT for the profit targets to dynamically set the profit targets. So this is what you want to see. You want to see an entry and then profit target, profit target, profit target, profit target, right? That's what you want to see. Okay, you know, you are going to get stop losses, of course, but you want it to be able to enter and then go to target, enter, go to target. And these targets are dynamically set um, according to the current volatility. And I'm showing you that it's performing better than ATR. And I'll be glad to share my simple entry signal with you and allow you to come in and test it. So you see this is what you're trying to get, where we're taking trades as it when it gets outside the ones. And the goal is to trade outside the ones. And you don't have to have Bloodhound and Blackbird, obviously, to get my indicator. You can just see when price breaks these ranges, and you can see that your range is expanding, going up, and your threshold value is going higher, right? So each 15-minute candle or 15-minute volatility bar is sloping up, right? So that's when range expands. And that's what we want, to put in the memory hole if you don't have, Bloodhound and Blackbird to auto trade it or to help you trade it. You can just know what to look for with the direction of the PT slope and threshold level relative to location outside these ones. I'm not showing you the twos and threes on here. I'm just trying to give you an idea that we want to be away from the ones going out when we trade this strategy. And so you're not going inside this. So with that understanding, there are times that it's going to hit a wall, right? Um, Not everything is 100%, but pretty clean cumulative net profit. It goes, positive real quick and grows. That's what you want, is that, distribution change growing and let the strategy run. So it just stayed positive the whole time, as we can see right here. But when it did have a drawdown, it was a result of, hitting a Penberg, as I call them. That is usually one of those higher time frame areas on the chart that we look at for the standard deviations of those higher time frames, like the weekly, daily, monthly, quarterly. So you can see here where price came into the weekly level, and it didn't matter that you had your momentum and you had your VWAP, but it wasn't going anywhere, darling, because you were, on support. So the auto trading bot would, re-engage and not get very far because it was pinned. So having the indicator in front of you and knowing where these levels are intraday is so helpful. Um, so you can be just monitoring where these higher time frame support resistance areas are, because that's where, the dealers like to come in on those ones often on multiple time frames. And they'll use that for their spreads. So if they're trading outside the one, it goes to that higher time frame too. So you can bypass the day time frame stuff and just realize that you're trading a weekly 1 to 2 and start, getting adjusting your risk in your head using that range. And you can see that the slope is going straight up and price is going straight down to target. And here we've got slope going down and price pulls off that bottom. So just get used to, trading with the range expansion, hopefully in the direction that you would like to trade in. Here's a good example of a weekly 1-to-1. Real nice trade there. So trade with your momentum, your range expansion, and have an idea of where a higher time frame target is. But that September 1st, I wanted to show you that first drawdown that was on the auto trading strategy, the little algo outside the ones. That was September 1st. And here we go. Here we go, right here. See? Penberg, second standard deviation. And we've got several of them. That was a confluence. You had a Globex, and you had a daily, and you had a weekly. So there was a three. So that's why I didn't make it down here. It just got it attached. The puts came in right there. So it went back to the mean, went back inside. So the market will range, between, and here was a 2-to-2. I love these coast to coasts. So trading support to resistance is a wonderful way to trade, but I'm showing you also that you can just trade by just using, go outside the distribution, outside your VWAP, go to target with the rising volatility during the RTH session, and just trading that, leaving the range, going with VWAP and momentum, my mom WAP, real simple, um, can be extremely interesting for you to understand what it is you're doing when you're leaving that first standard deviation and then going to target at that time. So it's a sort of a rules-based, restricted strategy. You're not in the market as much as the other strategies you might be trading, but this is one contract, right? Just think what would happen when you increase your contracts. Let's look at that. So instead of just trading one contract on the E-mini, you could trade 5 or 3. Let's just do 5 because the E-mini you could actually trade, 50 or 100, but you could certainly get filled on a 5 lot. And so once you have a winning strategy and you have a forward positive trade performance and profit factor, then that's when you just increase your positions number and scale it up. So you can go 5-fold above 85,000, keeping your same profit factor and percent profitability. You might even improve it. You'll improve that profit factor. So when you have a good percent profitability strategy, use that technique, find something that's working, and then just increase your entry size when the condition exists, right? When you're trading outside the first standard deviation with rising volatility, that's, don't wait for an invitation, right? I'm sorry I'm being facetious, but you know what I mean. So let's let this run. Okay, and check the performance, and it should be basically the same as this 85, but with the additional contracts on it, and increase that profit factor. Well, it actually maintained the same profit factor, um, and the same percent profitability. My mistake. But you're increasing the number of your net profit 5 times. So that's what you want to do if you have the count size to do it. That's the way to do it. Um, Find percent profitable strategy and put some position size behind it. Um, but like I said, the trick is not to trade into support resistance. So this doesn't take in consideration that the weekly or the monthly or the quarterly one could be sitting right there blocking your trade, but it will get you out, right? So here's a good down and up. Waits to get outside. The first standard deviation starts firing off. Same thing over here, but doesn't trade the inside. So you don't have to have Blackbird to do this. You can obviously get just the indicator itself with NinjaTrader and either learn. You could probably code yourself or code it yourself. And there's also NinjaTrader has an easy script platform that you can maybe learn how to put the Jats indicator in there and get some strategies going outside the first standard deviation with the rising volatility. So that's it for this strategy. I want to also look real quick at one other thing and just talk about for one last time the quarterly contract, or excuse me, the quarterly distribution on a daily range. Um, this yellow line is the JP Morgan new call wall, and the first pink is their put line, and the bottom pink is their sold put. So they buy a put, they sell a put, and they sell a call. And so that's like a put spread with a sold call on top of it. And if price travels outside this first standard deviation, um, or their call wall, it's also sitting on the quarterly first standard deviation. Um, they're not they're losing money. Um, the strategy simply does not make any money. They're not participating in that upside move. But if price gets below this bottom, excuse me, put that they've sold, they're exposed to the strategy losing a shit ton of money really fast. They have like 41,000 contracts on this. So that won't happen. So you can pretty much tell yourself that this 3,060, 3,050 that they've put their market entry order on for the bottom is going to be the bottom for March 31st. If that helps you plan your trade, I would think it would be a high probability. So I ran the Black Scholes model of this using the Quick Strikes pricing sheet and ran some other put spreads and different strangles, and I actually did a collar trade also using their tools, and it's pretty fascinating. You can get, you know, some good premium. So I put an extra um, premium on my sheet. Did a March 31st, sold a put at 30.50 and sold a call at 40.50, and am collecting 10,589 in premium. So my call is at 40.50 right here on their call wall. So I'm just joining their call wall. And if that gets challenged, I have a little bit of a break even, but I will probably sell a call higher. So if it does look like price gets up here to challenge this call wall right away, um, I'll probably sell another call at 4,500. Just say, and maybe um, you know sell it one more close in, or do something like that. Maybe a call spread. Not quite sure how I'll do this. Maybe just one call, sell it. But I'll look at that. You do not want price getting above this. I don't. Um, for my spread, I'm more exposed. So I have to close it. But I really am expecting this downward move pretty quickly. The market has been trying to get down for 8 days, and they pinned it, pending that end of the year. And so, you know, could be looking for this first touch of the 3,500 and back up, and have some nice range trading. Definitely be looking at the calendar, the OPEX calendar, and my monthly um, levels. You can see how we were pinned on this monthly two, uh, coinciding with all those quarterly ones and that JP Morgan stuff. So we had quarterly ones and monthly twos, and that's why I was pretty confident that that level would not break. And here were the weeklies. So the dealers, were really, wanting that spread to, hold in place for their year end. Absolutely. Here's some quarterly, monthly, weeklies, putting them all on the same chart. So this is what is so helpful intraday. These are the highest of time frames. We're I'm day trading these lower time frame ones, twos, and threes on the lower time frames. Um, but being able to, get an entry timed off these larger time frames positionally provides a lot more alpha because you have much larger ranges that you're dealing with, and potentially to get back up here to this top end right here, it's where it's heading. So happy new year. I'll give you guys the logic that I'm using. It's just, like I said, a very simple um, momentum and VWAP strategy, and the trick, of course, is just waiting for your standard deviation lines to break. And if you're, sitting there on YouTube land and not understanding why that is, you can just go over here to standard deviation um, bell curve, and they'll spell it right. And so you can see that when it breaks the one, oops, where'd it go? Right there. When it breaks the one, it's going to go to the two and or the three, and then somewhere around here come back in. Usually, sometimes it'll go out in the tail, especially if you're on those smaller time frames like the 1 hour IB, and the Globex likes going to tails. And usually when you go to a Globex tail, you're going out to a daily range 1, 2, or 3. And if you're on a daily 3 break going out, you're usually going to a weekly or a monthly, so you're going out to another higher time frame. So I'm trading time on these first standard deviation range breaks. That's what this is. All right, guys, we'll show it to you next week, or actually this week. See you in a couple of days. Thanks.